Yo, what is up, guys? Welcome back to another trade recap. And today, on a new account, so first of all, I'm finally back, and I'm finally back to trading. I didn't trade for over a week, because I'm in the military, and I didn't have time. And then it was like Thursday and Friday was like news coming out, and I wasn't even like able to trade on those days. So yeah, I didn't trade the whole week last week. Don't know if it's a bad thing or a good thing. I haven't backtested the week yet, but yeah, I'm back now, and I'm back with a W day. So the first real trade on the account. So consistency is going crazy right now. What the fuck? So as you can see, new account. This is on Lucid Trading, and really nice. We have the Tradingview integration. So the trade I took today was pretty, like, I would say, basic. I wouldn't say it was a basic trade. I wasn't really sure about the daily bias, just because like we had this high time frame SMT divergence, right? High time frame bearish SMT divergence, and I didn't really know if we already fulfilled this SMT divergence by taking out like these lows, you know, because this is like three low time frame lows, low resistance low resistance lows. So I wasn't really sure if we have fulfilled this SMT or not yet. So I was like, okay, if I find some good bearish confluences, and also because of this right here, this retrace right here, which was like kind of good, I wanted to be bearish, like, not the retrace, this fair value gap right here. Sorry, it wasn't the retrace. It was also the retrace, but like more it was because of the fair value gap. But basically I wanted to be bearish, but then what happened? Market opened, we swept out London lows, we created a bullish SMT, and at this point I should have switched to a bullish bias, because this is like the perfect scenario for my strategy. Like, this is the exact plan. Like, wait for a liquidity sweep, wait for the SMT divergence, and then like just check the low time frame confluences for like inverse value gap and shit like that. We didn't actually get any good low time frame confluences, so I don't really know if I would have even entered this trade right after we got the SMT and the liquidity sweep. But I entered on a short position. Was it a short position? No, it was a long position actually. No, it was a short position. It was a short position. Bro, okay, I'm not gonna explain this first trade because I really don't know what I did there. After this, I actually took another trade nearly right after it, and it was a okay trade, right? It was a long position, and I actually managed my risk pretty well. So it was looking something like this, I think. Yeah, probably something like this. And this is the, oh no, it is, what am I doing, bruh? Bro, what? Oh, I'm tweaking hard. Okay, now I know what's going on. What the fuck, dude? Okay, so this is a trade that I actually took, the second trade. And this was a break-even trade. So I opened the trade off of pretty basic confluences. We had the liquidity sweep, we had the SMT divergence, the bullish. We had this 2-minute fair value gap, which got filled. And then I entered after a bullish close, which looked pretty strong. I entered right there. My take profit was set at these highs right here, but I should have put them where my behind entry point was, so my break-even point was. Why? Just because like I aimed way too high for no reason. I should have just aimed for this low resistance liquidity, and I would have gotten I think 1 to 4. Yeah, 1 to 3, 5, 1 to 4, something like that, risk to reward, which would have been totally fine. But I don't know why. I actually was thinking about closing the trade right here, but kind of like emotions got to me or something like that, and I didn't close the trade and I just hold it. But I did my risk management. I risked half of the position of the first trade. So first trade was I think $90 risk. Second trade was like $60 risk. It wasn't half. It was a bit more than half. And then yeah, I put my stop loss behind entry where I said I would put my stop loss behind entry, and then we got stopped out behind entry. Now the third trade, this is the real trade, bro. This is the really nice trade. So third trade was based off of, let me show you guys. Okay, wait, I can actually, bro, this is so fucking confusing. What the fuck? Okay. Okay, this looks good now. So third trade was based off of a 30-minute inverse fair value gap, right? Which we inversed this 30-minute fair value gap, right? We moved past it, then we retraced back into it, while also retracing back into a 5-minute fair value gap, and S&P, so ES, hitting equilibrium, right? Really nice confluences. I really like that. Also combined with the with the sweep of London lows beforehand, like the SMT divergence, which I mentioned before, the bullish SMT, right? All combined with this, still based off of those high time frame confluences. Now I entered after this bullish close, which was where I wanted to enter, but my entry was way later on, which is kind of crazy. I just like reacted too slow, I guess. The real trade should have looked like this. Bro, this would have been a way better trade. This would have been a 2 risk to reward trade, but my entry was so late that it was a 1.3 risk to reward trade. Now, I put my stop loss right below the 30-minute inverse fair value gap, and then I put my take profit at the recent highs, which was right here. And then my break-even point was at this fair value gap. So we had this 1-minute fair value gap. Or was it a 2-minute? It was a 2-minute. And we had this 2-minute fair value gap, and I put my behind entry point right after the fair value gap would have been filled fully, right? And then we hit my break-even point, put my stop loss behind entry, so at break even, and then we just moved on and hit my full TP, so the only TP I had, at a 1.36 risk to reward. I don't really know actually why I'm positive on the day, because I should have been negative on the day. I risked $90 on the first trade. I break even on the second trade, but it was like minus $3. And then on the third trade, I risked around like $60. Oh, no, it was $60. And then I made more than like $100. That doesn't make sense. And I don't really know where I can check this. Max run up, total loss $70. Largest losing trade 60. Okay, so actually the first trade was way smaller than I intended it to be. Yeah, it seems like somehow the first trade was way smaller than I intended it to be. So I don't really know what to say, man. I guess it was luck that I'm positive on the day, but I mean the trade was good anyways. If I risked $90 on the first trade, and the second trade would have been actually $60 with a 1.3 risk to reward, it would have been, it wouldn't have been $90. It would have been like $80 profit, something like that. So I would be down like $10. That's everything for today. Hope you guys enjoyed. Hope you guys learned something. See you guys tomorrow. Tomorrow I'm gonna trade. See you guys tomorrow, and then yeah, peace out.